Welcome back to this week's market drama. We'll start with the markets. The S&P 500 fell 0.65% last week in the back of weaker than expected December retail sales, as well as weaker than expected industrial production numbers. Retail sales matter significantly to the economy because consumer spending is 68% of GDP, right? If you look at our garages, full of stuff, right? So when you have a print that shows that December, so 1.1% decline month over month for retail sales, that's not a great sign for what's to come this quarter. Now, it actually would have been worse for stocks if it wasn't that consumer service sector rallied big in the back of Google as well as Netflix. Netflix rallied over 6% with better than expected earnings, especially when it comes to subscription numbers were higher than expected. And then Google rallied after they made announcements on layoffs. And essentially the market is reading into that of, okay, at least they're acknowledging that they need to readjust their playbook if ad spending has come down. When it comes to this week, I would look at this week as the proper beginning of earnings season. We have Tesla, AT&T, Verizon, Boeing, IBM, Visa, MasterCard, among many others that are reporting. Earnings are key to the stock market. It is the one variable over a long period of time that drives returns, right? So now we'll get to see in the next couple of weeks how that turns out. We also have composite PMIs for January coming out on Tuesday for global, meaning like around the world. We're going to see how economic activity is looking for the month of January so far. It'll be a really good indicator, especially in Asia, to see if that reopening of China post-COVID, kind of closing the economy, if that's actually starting to show up in the numbers. Then we also have PCE price index coming up on Friday for December. This is a personal consumption expenditure index. This is the one that is similar to CPI in the sense of what it's trying to measure, but the Fed favors this one. So there's going to be a lot of eyes looking on what that number looks like. Specifically, the core PCI year over year for December expectation is for 4.4% growth. So that's something that we're going to keep an eye on. That's it for this week. Stay tuned for next week. Take care.